this anymore. Don't really do this anymore. Don't really do this anymore. Don't really do this anymore.
Congratulations on taking the first steps to homeownership. In this video, I'm going to break down for you all the upfront costs when purchasing, what to expect, and all the timeline of events. We're going to go over all of the things in this video. It should take about a total of 30 minutes. If you've never bought a house before, you haven't bought a property in Florida, or it's been a while, how do you know how much an earnest money deposit is, or what an earnest money deposit is, what the current prices are for these inspections, how much are standard closing costs for resale or new construction? I'm going to answer all those questions for you in this video. You are going to feel confident about the home buying process, and you and your family are going to know what are the next steps you need to take moving forward. Let's go ahead and dive in and set you up for success. I'm Stevie. I'm a real estate agent. My team and I, we service Jacksonville, St. Augustine, and Ponte Vedra Beach. If you are not currently local and you're another area across the US, let me know. I would love to set you up, start a conversation with one of our realtor referral partners. The first step of purchasing a home is to hire a real estate agent. There are many benefits of working with myself and my team. I'm going to list a couple of them for you here. We handle all of the paperwork, all of the legal documents, the contract disclosures, and closing documents. We are all well educated and experienced with the entire sales process. We help you with negotiating that offer, that aggressive offer in this current market. And we act as a buffer in negotiations with all parties throughout the entire transaction. We help you with pricing. We strategize an aggressive offer, and we're here to help you understand today's real estate market. So not only do you have access to the properties that are on the MLS that every other real estate agent has access to, but my team and I are out there to hunt for the perfect property for you. So once we know all of your specifications, we have pocket listings, and we see if we have a seller who might be interested to sell within the specs that you're looking for. And then also we hunt for off-market properties for you. Also, keep in mind, as a buyer, you do not pay my team, myself, anything. The seller actually takes care of the commissions. Keller Williams does have a transaction fee of $450, and this is owed at closing. So it will be in addition to your closing costs and your down payment, but you are not actually paying us a commission. The seller takes care of it. The second step, I'm sure you have heard of this, and that is to get pre-approved. This is probably the most important step, and let me elaborate on why. I would hate for you to get out there, start looking at properties, find the one that you absolutely love, and then come to find out that you aren't able to get approved, or with it being at such an aggressive market right now, for us to just not have enough time to get in contact with the lender, to turn in all of your documents to get that pre-approval, and then we lose out. So it's best, in order to set you up for success, let's start communicating with the lenders now. So I have 4 lender recommendations that I have for you. They are included in my buyer's guide. If you do not have those contacts, please let me know, because I would love to send them over to you. I do not get any kind of kickback whatsoever with you using one of my preferred lenders, but I will tell you what the advantages are. One is they are local. They are handling a lot of my business. I'm communicating with them on a daily basis. So they want that business. So they want to make sure that I am happy and that my clients are happy, so that we can continue this business partnership. So they are going to make sure that you have a good home buying process. Whereas a lot of these other big banks, they don't care. They also usually only work 9 to 5. Well, a lot of times we are looking at properties after 5. We're looking on the weekends, and we need someone to be readily available, especially for a first-time home buyer. We don't just communicate with this lender once to get the pre-approval. We are talking with them so many times before we even go under contract. And then during those 30 days of being under contract, we are communicating. So we want somebody who doesn't work just 9 to 5. Also, if we're out and about, we're looking at properties after 5 or on the weekends, and you have questions about what would my closing cost be on this property, before we put in an offer, I'd like to know that. I would like to know what my monthly amount would be, because it's going to change depending on what the taxes are for that property, the homeowner's insurance, HOAs, they vary from neighborhood, and what is really popular in Northeast Florida is CDD fees. So if you need me to break that down for you, let me know. But back to having a lender who is readily available. That's really important that someone is going to be there to answer those questions for you. And then when we put in an offer, so let's say you got pre-approved. Let's say you got pre-approved up to $500,000. When we are putting in this offer to the seller, we are not presenting that $500,000 pre-approval. We are only presenting the exact dollar amount that we are offering. So if we're offering $450,000, I need that lender to draft up a pre-approval for that amount, and I use that to present to the seller. So I'm sure you can get where I'm getting at, that if it's on the weekend and they are not available, I'm presenting an offer, I wouldn't even want to send it in unless I have that pre-approval. And this might end up deterring you from getting the property because we didn't have somebody who was there for us, who was able to answer our questions and to get a new pre-approval draft. So those are just a couple of the reasons why I highly recommend reaching out to one of my preferred lenders. Let me also mention, I'm sorry, but they're local. So if you are too, and you want to meet with them personally and talk one-on-one, if you want to email them, you want to text them, you want to talk to them on the phone, they will be available for you. And they will be there to hold your hand and walk you throughout the entire process. Okay, just wanted to add that last one thing. In my home buyer guide, you are going to see the 3 loan options broken down: the VA loan, FHA, and conventional. Now, the lender is here to answer all of your questions. I do not have access to any of the documents, information that you provide to the lender. I don't know what your credit score is, your debt to income, what's on your W-2, what's on your taxes, all those things. I do not have access to any of those. So once the lender does, they can direct you on which loan option is best for you. I will say a lot of times people think that they have to put 20% down. Of course, it has its benefits. If you're putting 20% down, your loan amount is going to be less. And then in turn, your monthly amount will be less. But a lot of times people aren't able to put 20% down, and that's okay. With the FHA loan, you only have to put 3.5% down. With a conventional loan, there are 3% options and a 5% options. With putting 20% down, you do not have PMI. So PMI stands for private mortgage insurance. It's insurance that protects the lender. Since you didn't put that much money down, you might have an additional fee every single month that will range from, it depends on the purchase price, $100 to $400. Once you have 20% equity in the home, if you had a conventional loan, you're able to get rid of this PMI. We can dive in deeper, your lender can dive in deeper, but just to let you know that you do not have to put 20% down. There are options here. FHA loan and conventional loan are your 2 options. But if you are active military or veteran, you can take advantage of the VA loan. Super low rates, and you don't have to have a down payment. That's one of the huge incentives with the loan. Of course, you can put down a down payment and it will make your monthly amount lower because you will have a lower loan amount. But one of the huge perks is no down payment. So please go to the buyer guide under prep for your purchase to review these items on getting qualified, the different types of loans that they have, the credit scores, and then a breakdown of estimated percentage that you would put down for that particular loan. And the lender can go over your options with you. You can go over what your numbers would look like, even as you put in offers on properties. You can say, hey, with this house, what would my down payment be with an FHA conventional? What would my monthly be with an FHA conventional? And what my closing costs are. Also on this page, you'll see what items are needed for qualification so that when you get the link from the lender, they're going to have you do an online application through their website. And there's going to be some qualifying income that you're going to need to provide. You're going to need to provide documents. And I have a list here for you to use as a guide. The next page in my buyer's guide is my contact for my preferred lenders. They are all local besides Kristen. She is in Orlando. You can of course call her, email her, text her. Everyone else, the other 3 options are local. You can meet with them in person if you feel as though you need to talk with somebody face to face. there is that option there for you as well. So these 4 lenders, I highly recommend. At the end of the day, you get to choose whoever you want, whoever is a best fit for you. The third step of the home buying process is the search. Let's discuss your wants and needs. So after you have gotten your pre-approval from your lender, you should have educated your lender on how much you want to spend a month with your homeowner's insurance, taxes, HOA, and if there is a CDD fee. At this point, we will know of a range of purchase prices to focus on. So I will get you set up on a search from my MLS. You are welcome to use any of the other website as resources, but my MLS, it updates every 15 minutes and it is the most up to date. I can set you up to receive these listings, whether or not you are months away from starting the process. I can set it up to where you are not going to be bombarded with emails. They can be sent to you monthly, weekly, every other day, whichever you prefer. If you're looking right away and you need to be notified ASAP, we can make that happen as well. So I would love to learn more about you. What side of Northeast Florida are you interested in? Are you needing some guidance on figuring out the different neighborhoods, different sides of towns, different counties? Whatever it is that you have questions about, I would love to be a resource for you. So we'll talk about the number of bedrooms that you need, bathrooms. Are you looking for a single family home, a townhome, a condo? A condo is its own type of animal if you're doing financing. So there are several things for us to inquire on when searching for a condo. Is there a capital contribution? Are there any special assessments? If there are any litigations going on in the neighborhood, because if that is the case, then we would not be able to do financing. So we want to make sure that this is a community that you would be able to get financed in if that was the way you're going. So we will work together on finding you the perfect home. You're going to receive the listings from my MLS. I am also going to reach out to for sale by owners. My team and I, we have pocket listings. So we'll see if we have any sellers who are interested in selling. And then in addition, like I mentioned, we hunt for properties for our buyers. So if there's a particular neighborhood that you're interested in, we will send postcards in there. We will call into the neighborhood. We will door knock. Whatever it is, we will do everything in our power to find you an off-market property. It's extremely competitive right now, and it's a huge advantage when you're able to find a property off-market, so you're not having to go through that whole multiple offer process. So that breaks down step 3, learning more about you, the area of town that you want to be living in, and discussing your wants and needs. Step number 4, negotiating your terms with confidence. So this process is nothing like you see on HGTV. And I know for a fact, because several years ago, I was on the show. I'm so sorry to tell you this, but at a stage, it's not real. They make it seem as though the realtor steps out into the other room, calls the other agent, is like, hey, my buyer wants to offer X. Like, do you accept? Or are we going to banter? Are we going to go back and forth? It is not like that at all. We are filling out, our contract is 10 pages, and we're not only just going over the purchase price, we're going through all the terms. When is the closing date? Are we asking for any items like the washer, dryer, refrigerator? When is our home inspection contingency period up? How much is the earnest money deposit? How much is your down payment? We are discussing all of these items when presenting an offer. And I'm also drafting up all of the disclosures for you and getting a copy of your pre-approval for exactly the amount that we are willing to offer. Not what you were pre-approved up to, but up to the exact amount that we are offering on that particular home. So we will strategize. Once you find the perfect home that you feel as though you're ready to put an offer in, we're going to look at comps. So I'm going to run a CMA for you, which it means it's a comparable market analysis. We are going to get an idea of what this property is worth. So we're going to be looking at what the appraiser is going to be looking at. What has recently sold within the area within the last 6 months that's comparable to this home. Also, that's comparable to the condition of the subject property and upgrades, and we can make adjustments as needed. So I draft up this report for you to give you an idea of my opinion of the value of the home. So then we can kind of come together with a game plan from there. Now, I want to give you just a little sneak peek of the strategy of when we are in a multiple offer situation. So each home is case by case, and I'll be advising you throughout that process. But just to give you an idea of some of the terms that we are negotiating in this current market as you watch this video, is extremely competitive. So let me just share with you a couple of those things. So in our contract, there is a 10-day home inspection contingency period. It protects the buyer during that time. So they change their mind or we can't come into an agreement with the repairs, that within these 10 days, we can still get the earnest money deposit back if needed. But since we're so competitive right now, that a lot of times in our initial offers, we are writing that there is 0 days for the inspection period. So the earnest money deposit isn't protected. We will dive into the earnest money deposit. Let me just share for this video right now that the earnest money deposit at the end of the day, it gets applied towards your closing costs and your down payment. Another term that we're negotiating is taking the property as is, that we are not going to ask the seller to do any repairs. So you still, as a buyer, have the right to inspect. You get to see what it is that you're walking into, but we are not to ask the seller to do any repairs. Another strategy is to offer over asking price. Now, at the end of the day, yeah, you can keep going up and offering so high, but if the property does not appraise, you cannot get loan approval. The bank, they're lending you all this money and they want to make sure that the home is worth what we are under contract at. So what a lot of people do, to put in an aggressive term, is if the home does not appraise at the contract price, you are willing to offer to pay X above appraised value or covering the entire amount difference. I know this can be kind of confusing. Let me give you an example. So let's say that we decide to offer $350,000 on the home. And we're looking at comparable properties. We know that we're offering really high for the home. Let's say the home was listed at 300,000. Okay, we're offering 350, and so there's like that $50,000 gap, right? And we are like, well, it's not going to appraise, but in the event, we are willing to cover that gap entirely. That could be one of the terms. So if it came in at, for example, 305, well, I said I was willing to pay up to 350, so I am going to owe $45,000. Does that make sense? Another example could be, let's say the property came in at 340. You would only owe $10,000 because we said we would pay up to 350, right? Or it came in at 345, you'd only owe 5,000 because we said we would pay up to 350 is only a $5,000 difference, right? So if you leave it where you're covering the entire amount difference, no matter where the appraised value comes in at, you're agreeing that you are going to pay that difference. Now, another option that you could do is say that you are willing to pay X. So no matter what the appraisal comes in at, we put a cap on it. We're like, hey, we're willing to pay $3,000 above appraised value, $5,000, $10,000, but we're not just going to leave it up in the air. Let me know if you have more questions about that. Lastly, another term that I will share with you is to offer to pay some of the seller's closing costs, to pay all of the seller closing costs or some of them. And that amount depends on the purchase price of the home. So those are just a couple strategies that we use to put in really aggressive offers right now. Like I said, with this 10-page contract, we'll be discussing the earnest money deposit, financing terms, inspection period, closing day, personal property, any items that we want to convey, the washer and dryer, pool sweep, water softener, all of those things. We get all that written up ahead of time before we present. All right, so that wraps up what it looks like when you have found the one and we are getting ready to put in an offer. I explained the comparable market analysis, the strategies, all of the terms that we need when putting in an offer. So I hope this gives you a good idea, but as always, any questions that you have, especially about the appraisal gap, don't hesitate to reach out. Step number 5 is home inspections. This is very, very important, okay? So make sure that you return to this page in the buyer's guide. If you are purchasing a resale property or new construction, we highly, highly recommend that you have a professional home inspector conduct a thorough inspection. So even though if you're doing a new construction home, a lot of people think, okay, it's brand new, it's perfect, there is no reason to do a home inspection. I assure you that there is. Even though it's brand new items going into the house, it's still man-made, and we are humans and we make mistakes, and these contractors are building at a high volume, so it's not going to be perfect. I've never had a perfect home inspection report, and this is how it looks. We get a home inspection done. There is going to be item after item after item of things that were not done correctly. You are paying a lot of money for this home. It is a huge, huge investment. All I have to do is take that inspection report and present it to the builder, and they are to fix every single item on there. So it's a little bit more expensive than the standard home inspection cost, but I highly, highly recommend if you're thinking about doing new construction and you're thinking about picking out the land and building from the beginning, that there is a multi-phase inspection process that you can go through. Most home inspectors do provide this. So there is a pre-drywall inspection, which this is about $500. And then you have, after the builder comes out, because there's going to be items on that inspection report, after that pre-drywall inspection, when we get that report back, because it's going to have a lot of items on it, I take it to present it to the builder, and then the builder fixes those items. But how do we know that they were done? How do we know that they were done correctly? We're not home inspectors, right? So we can hire the inspector to go back out to the property and re-inspect those items to make sure that they are done correctly and to the correct standards. We can hire the inspector to come back out and look at those items. It is an additional cost, and it does depend on the number of items. Then you can do another inspection towards the end of the process. Literally about 2 weeks before closing is a final inspection. So the inspector goes through the house, they draft up their report for us, and I promise you, they go through every single nook and cranny of that house. It's probably going to be a 100-page PDF. You can attend at the end for the wrap up, and the inspector is happy to go over, answer any questions you have. I have everyone's cell phone number, so it's not as though you have to attend that home inspection, and they take photos of everything. They have everything in great, great detail. So for that final inspection, I get the report back. I present it to the builder again. They go through, fix all those items. And just like we did before, we hire the inspector to come back out to make sure that those items are done, they're done correctly and to the right standard. So that is another about $500 cost. So each inspector, each company, their prices range slightly. So if you need me to call companies, you need a price as of what it is today as you're watching this video, or at the time of you meeting the inspector, let me know, because my team and I are more than happy to do that for you. Now, as far as resale, we have to get the home inspector into the property as quickly as possible from the time that we go under contract. And it will typically take about 3 hours depending on the size and the age of the home. And they will do what is a standard inspection. It depends the size and the age on what the price is, but I will give you an average price of about $400 to $500 for the standard inspection. Now, in addition to the standard inspection, I'm always recommending doing a WDO report. Now, this is required for a VA loan and an FHA loan. You do not have to get this for a conventional loan. The WDO inspection is for wood destroying organisms because we have bugs here in Florida. So the WDO is a different inspector sometimes than the actual home inspector who is inspecting the entire house. They will go out, see if there's any past termite damage, current active termites, any wood rot, and they will draft up a report for us. So I highly, highly recommend this. Then you also have a couple other inspections depending if the house has a well. So we can do a well water test. We can do a septic. If the home is on a septic system, we want to make sure that that septic system is in good condition. Okay, if the house is on septic, I highly recommend getting an inspection because this is a huge expense. If they tell you, oh yeah, everything's good with it, I wouldn't take their word for it. I would get the inspection done because to my knowledge, if you had to replace it, it's like $10,000. So let's know about this ahead of time. And I believe those prices range from $300 to $500. You can also do a pool inspection. If the property has a pool, this price ranges from $200 to $500. If you wanted to inspect the chimney, this is a different type of inspector, and this ranges about $300. The last two things that I will mention is if you would like a discount in your homeowner's insurance, you can get a 4-point letter of wind mitigation from the home inspector that essentially breaks down a report for the homeowner's insurance company listing that the 4 main points are in good condition: roof, AC, electrical, plumbing. Now, if they're not in good condition and we know those items need to be replaced, I wouldn't suggest doing the 4-point letter because we might not want the homeowner's insurance company to know about that. But if they are, then we want to get that in writing. We want to get it documented by the inspector, turned into the homeowner's insurance company so that you can get that discount. So now that we broke down all of the costs with the home inspection, I want to share with you what the process looks like from, okay, we reviewed it. How do we ask the seller for repairs? What does that look like? I will say at this current time, buyers are having to be aggressive and take properties as is. Like I said, you still have the right to inspect the home, but you might not have the opportunity. It depends on when you're watching this video and when you're actually purchasing a home, but you might not have the opportunity to ask for a repair request. But in the event that you do, let's talk about it. So when we get the report back, we review it, and then we have a repair request form that we can fill out, and we can ask the seller to fix A, B, and C. The seller reviews it, they get a copy of the inspection report, and they have 3 options on how they want to respond to you from that repair request. The first option is they're like, okay, we will have contractors come out and give us quotes for these items. Typically, if it's a job that needs a contractor, that's required. But if it's like caulking or fixing a doorknob or a toilet or something like that, you can have a handyman come out and fix those items. So it just depends on what it is. But they will have the person come out, get the quotes. They will agree to, okay, done. We will pay that contractor. They show us proof of receipt that, okay, done, paid, don't owe anyone money. And then you have the option to hire the inspector to come back out, re-inspect those items, make sure it's done correctly and to the right standard, right? So that's the first option, that it'll be done for you and we will have all the proof and we will get it inspected. The second option is that they say, no, we're not going to hire somebody. We're not going to do these quotes. We're not going to have someone come out here and do any work. We will credit you money. So you will see this seller credit broken down on your settlement statement at closing. And let's say we got a credit of $5,000. It'll be $5,000 less that you will be bringing to closing. So it'll come out of your down payment, your closing costs. You'll see that credit listed there. Third option is the seller says, no, I am not going to hire this contractor. No, I'm not going to credit you money. You can decide to move forward or not. So what this looks like is you can either say, okay, fine, we couldn't come into agreement about repairs. They're not that major. I'm still going to move forward with the house. And then we're like, great. Then we are on to the next step. But at this point, depending on what the timeline is that we wrote in for the contract for you, if you are within your home inspection contingency period and you decide to cancel, we will fill out a cancellation form and release of the earnest money deposit so that you can bring that form to the title company and they will reimburse you for the earnest money deposit that you turn in. They will give you a check or they will wire the funds over to you. So, all right, so that wraps up this video. Step number 5, breaking down inspections. We talked about all the estimated costs with the inspection and what the inspection process looks like for resale and new construction. And then I also broke down for you what the process looks like if we decide to turn in a repair request. Any additional questions that you have about the home inspection, please do not hesitate to reach out to me. That is what I'm here for. Number 6 is submitting your loan to the lender. So you may have filled out an application online, but when it comes to submitting the loan, we want to make sure that the lender has all the documents that they need. So they may be reaching out to you, wanting some last minute things or adding some additional questions that they have for you. And it's really, really important that you communicate with them because for every little thing, there is a deadline. So you'll submit the loan to the lender and then it's known as going into underwriting. So the term underwriting refers to the process that leads to a final loan approval or denial. So even though you get this pre-approval, if you are getting pre-approved with one of my preferred lenders, I feel pretty confident that we will have no issues getting loan approval. But with other banks, I've had issues where 2 days before closing, something came up. They didn't check the credit. They didn't notice some debt that was on there, something along those lines. I feel really, really confident when you use one of my preferred lenders, but when we are in underwriting, they are analyzing your file into such depth and making sure that you're qualified for this loan because it's a risk for them, right? So they want to make sure that you're qualified. They don't want what happened in 06, 07, 08 to happen again. So that's why it takes so long to close. We have to go through a 30, sometimes 45-day loan approval period because you don't actually get the loan until a couple days, usually before closing. Once an underwriter has reviewed all of the mortgage applicant's information and documentation, which they still might reach out to you weeks in wanting an explanation on something or some additional information. So a decision will then be made on the loan status. And so typically you will be approved, we'll be good to go, and then we will work on all the things on the back end on finishing up and getting you to closing. So that breaks down what the submitting loan process looks like and what the term going into underwriting really means. Step number 7 is the appraisal. So this is another upfront cost. The mortgage company hires an appraiser to go out to the property to assess their opinion of value on the home. So they're going to be looking at comparable properties that have sold within the last 6 months that are comparable to this home by their size, their condition, their location, upgrades, and they will assess their opinion of value of the home. So the lender is going to be asking you for payment. Now, typically, man, this has been ranging. So recently I had a client, it was around $1,000. It was hard to get an appraiser to accept the job and have a quick turnaround time. But before that, it was pretty consistent with around $600, $700. And so this will probably be owed within week 2 of going under contract. So we like to make sure like we are moving forward after the home inspection, make sure that we are good with the home, the condition, we came up with an agreement with repairs, we're going to move forward. That is when I want you to pay for the appraisal. I don't really want you to pay for it before that because what if things don't go well during the home inspection? And then you may have wasted that money if we aren't able to get that back. But once we know we're moving forward, I would love for it to get that paid so we can hurry up and try to get an appraiser out there as quickly as possible so that we can meet all of our deadlines. So like I mentioned, the appraiser is going out to the property to assess value to make sure that the home, what it's under contract at, is what it's worth. Now, let me explain a couple scenarios here. Let's say we are under contract at $350,000 and then the appraisal comes back at $370,000. That is great. That's fabulous news because that means my buyers are getting $20,000 of equity into the home as soon as they move in. It's great. The negative side of this is if the appraisal comes in lower. So let's say we are under contract for $350,000 and the appraiser comes back and says, sorry, it's only worth $340,000. So the lender is only going to lend you up to what the appraised value is. So here in this example, we have a $10,000 difference, right? So there's a couple of things that can happen. One, the seller reduces to appraised value in order for you to get loan approval. The second option is the buyer pays the difference. So in this case, it's $10,000. Sometimes we negotiate, we meet in the middle, we try to come up with somewhere where both parties are happy. Or if we cannot come into an agreement, you have the opportunity to walk away. You will not be able to get loan approval, and so we wouldn't be able to move forward with the contract. So I hope that breaks down the cost of the appraisal for you, what an appraisal is, and what that process looks like. Step number 8, receive loan approval. This is what we have been waiting on, and it's always so exciting when we hear clear to close or CTC. It is a celebration because it's like we are almost there. We are almost to closing and you will be a homeowner. I will say, make sure that you have shopped around for a homeowner's insurance. If you need a contact, please let me know. We want to make sure that you get a really competitive rate. So after the file has been fully underwritten and all the conditions have been met, a final underwriting approval will be issued. And like I said, this is known as clear to close. So that means the documentation that you provided to your lender have met their approval and there are no additional paperwork required. So when you're clear to close, your lender is ready to fund your loan and will begin communicating with the closing agent over at the title company to prepare all the documentation that you will need for closing. And this typically takes like 5 days to 7 days. We try to get it as far out as possible before closing so that hopefully we aren't scrambling at the end. So one other thing to be working on at this point is making sure that you're getting the utilities set up so that you set up in advance for the electric to be set up on the day that closing happens, also the water or any other services that are needed out at the property, that you have those set up on closing day. So that's just a little friendly reminder. Any last minute questions that you have, maybe about the HOA or anything about the home, this is a really good time to ask so that we can get those questions over to the seller before we close. All right, so this was a super quick, easy segment, receiving loan approval. I explained to you what that process looks like, what clear to close means, and once we get clear to close, how long it takes to actually get to closing. And then I shared with you a couple quick tips on things to get ready for prior to closing. Step number 9 of the process. We are so close to closing. We are almost there. So at this point, we want to make sure that we are communicating with the title company, which Amy, my transaction coordinator, handles this. She'll be reaching out to you to find out when works for you and your schedule to close. So you likely already know your closing date at this point, and we will be setting up for when you can come in. You'll bring your driver's license and you will want to wire funds prior to closing day. So unfortunately, the lender typically, they'll give you an idea, like from the get-go, they will give you an idea of what the cash is needed to close, your closing costs, your down payment based off of that property and your loan, but we don't get the exact number typically 24 hours before closing. So once we get, it's called the settlement statement, also known as an ALTA, it will break down every single item that you are paying for. So on this settlement statement, it will break down what your monthly payment is, what your interest rate is, what your cash to close is, and each line item of all the things that you are paying for that are within your closing cost. And you will be able to see this cash to close. And I recommend going into your bank. Some banks want you to physically be there. So it might be a good idea to set up an appointment for you to wire funds, or at least give them a call ahead of time and just see, hey, I'm going to need to wire funds for my closing. You don't have to do this till the day before, once you get that final number, but inquiring, finding out, do I need to be there in person or can I do this over the phone? So just a reminder that about 24 hours before closing, we want to wire the funds over there. We want to have it over there in advance because some banks only send out wires in batches. So if you have a really early closing, it might be cutting it close and you don't want to have signed all your documents, have the key, and not able to leave because the loan they haven't gotten your wire, so it hasn't officially funded yet. So doing that far enough in advance is highly, highly recommended. Meeting up at the title company, this will be where you dropped off the check for the earnest money deposit, or where you had wired the funds for the earnest money deposit. Sometimes the seller is there at closing and we are all there together in one room, and the closing agent is reading off the seller costs and the buyer costs together. But I will say most of the time it is separate. So if it's you or your spouse, you'll be in there, just you with the closing agent, and they will be going over all of the documents with you. And sometimes they like a second form of ID. So this could be a military ID, a credit card, something like that. And make sure that you wire the funds to closing about 24 hours prior. So that wraps up this video of getting ready for closing. Step number 10, closing day. Oh my gosh, it's so exciting. What a celebration. You made it. You're going to be a homeowner. So I kind of already went over what I had written in my buyer's guide, which of who will be there, what you will need. But what we can discuss now is your final walkthrough. So usually the day of closing, we go walk through the property. We want to just make sure that the seller had gotten rid of everything in the home. There's nothing left. It is to the standard of when we went and looked at it, during the showing, that it looks the same, right? There's no holes in the walls. There's nothing crazy missing. The items that we had asked to convey are in the home. So we typically do this walkthrough about right before we are going to closing. So we'll schedule, Amy will reach out to you to find out about the closing day and time, but then we will also schedule the walkthrough at the same time. Okay, so that pretty much wraps up the final walkthrough and closing day. All right, so towards the end of the buyer's guide, I want to break down, I want you to see here the timeline of events. So you have an idea of when these events are taking place. Now, you'll notice on here I have listed 3 days, 5 days, 10 days. Once we're under contract, we will have actual dates. Amy will send those over to you, so you're not going to be confused. Like, is it day 3? Is it day 10? There will be no confusion. There will be reminders, so you don't have to worry about that. The next sheet in the guide, it shows it as page 15, is the upfront cost. So this is broken down for you. It's a great example so that depending on your purchase price, you can figure out what those upfront costs will be. So I just want to touch base on them real quickly. So based off of a $300,000 purchase price, the earnest money deposit is typically 1% of the purchase price. And then the earnest money deposit is explained in further detail on the next page, but I'm going to break it down for you here. Like I said, it's owed within the first 3 days of going under contract, and this is to either be dropped off or wired to the title company. So it's considered a neutral party, and you might have heard the term in escrow. It's technically the files in escrow now once you have the earnest money deposit turned in. So it's not going to me, it's not going to the seller, it's going to be held at a neutral party. It's typically 1% of the purchase price. So off of a $300,000 house, that's $3,000. And then like we had discussed during the home inspection, that there is typically a 10-day home inspection contingency period written into the contract for you. So within those first 10 days, if you simply change your mind about the house, or we can't come into agreement about the inspection report, or the items on there are just too costly, you don't want to move forward, whatever the case is, we can fill out a cancellation of contract form and release of the binder to the title company. Both parties sign off, buyer and seller, and then you are able to get your earnest money deposit back. They will either wire the funds over to your account or you can pick up a check. So let's say we don't back out of the deal and we get to closing, this earnest money deposit, it doesn't just vanish. It gets applied towards your closing costs and your down payment. So you will see on closing, there will be like a credit area because you had turned in this earnest money deposit. Home inspections. We dove deep on home inspections. I gave you a range of what they each cost. There's several. So you have an idea of what those upfront costs look like. And then just depending if the house has a well or a septic or a pool, that gives you an idea. Also, if you're doing new construction, if you want to do the pre-drywall and the final, that gives you an idea of what those costs were in that section. And then you have the appraisal, which ranges, but I would give you a good guesstimate of the appraisal cost being about $700. And remember, you are going to be paying the mortgage lender that you choose. They will be asking you for this payment. Next, you have closing costs. So on a resale home, closing cost is typically about 3% of the purchase price. So if you're purchasing a home that is $300,000, that's $9,000. And this is owed on closing day. And the lender will break it down for you, depending on the house, exactly how much your closing costs will be. But just to give you an idea, it's typically about 3% of the purchase price. Now, if you're thinking about purchasing new construction, closing costs typically are more. They're closer to the 5% mark, but what's really desirable, one of the reasons with new construction is that if you use their preferred lender with that builder, each builder is different. They each have their own preferred lender. If you are going new construction, you might have an incentive that you can use where they will pay all of your closing costs, or they will pay a portion of your closing costs. So that's something you think about new construction. That's something I can dive in deeper and find out for you. And then you have your down payment. So depending if you're VA, you might not have a down payment. If you are doing an FHA loan, a conventional loan, that percentage is based off of that. So that should give you a really, really good idea of what the upfront costs are when purchasing a home. The next page of the guide, it breaks down again what an earnest money deposit is. The next page is what are closing costs, and also just a couple of stats and information about how 61% of first-time homebuyers put down less than 6%. So like I mentioned, FHA is 3.5% and conventional 3 to 5% option. So it makes sense that most people are putting down less than 6%. Got a little checklist here for you, and that wraps it up. I would love to answer all of the questions that you have and have the opportunity to help you purchase a home here in Northeast Florida. If you have all my contact information, please do not hesitate to reach out to me anytime. Congrats on finishing this video. It's so important that you educate yourself on the process. I hope that you feel more confident about the process, and now you and your family know what the next steps are for you guys to take. So good luck, and let me know if there's anything I can do to help.